Hi everybody, this is Gary Dean, and this is our video report for Thursday, August 27, 2015. So the markets are doing pretty much as we expected, and that's strange to say since we've seen almost a 120-point rally in 2 days. But it's pretty much what we expected, and what I mean by that is we've had such a big drop that any kind of, just the slightest retracements is a lot of points. And if we've learned anything from our history, which everybody believes that this time is different, when a short-term low is in or any kind of low, the bulls pile in, and that causes shorts to cover, and we get these very, very extended moves. Hence the 120-point rally in 2 days. So it was one of the things that when we were down here, we were getting that gap up. I said, we've seen this before, and you do not want to short this. I wanted to go long. I put out, where you guys can look to get long. It was just kind of priced out of my range with options, but hopefully you guys took it because you're now, it's some 80 points, 90 points higher than where I put out that email. And it's, I don't think it's done yet. And that's the thing is everybody well, we're starting to get the color back on the faces of the talking heads and the cheerleaders because they were white as a ghost as the S&P was dropping hard. So now after 2 days, they're starting to get their kahunas back and saying that the low is in and, where are we going? Where's the next top? So we're switching that mentality, which is a good thing because we got them cheering again. And when we were getting that gap up yesterday, nobody was cheering because they were all cheerleading this gap up here, and it gave it all back plus 25 points. So they were very subdued about the 40-point plus gap up yesterday, and that was kind of my clue that we were going to keep going higher, and that's exactly what happened. And I had said don't be surprised to see another 20 point gap up because that's just what the bulls do. They jump in, it's an all-you-can-eat buffet, and they are there, and they're stuffing their face. They're making, hay while the sun shines. Now, what is going to happen is it's going to start stalling, and we could push above here. This is just an area that makes sense, the 2,000 level. And, again, we have had a 120-point move in 2 days, and we still haven't retraced 50% of the move. So that's what I mean by, once we found some kind of bottom, you don't want to short this because they do this every time. So let me show you how the technicals working on different time frames play out on each other. So here's a 5-minute one. Here's the big move up. And you can see we started getting bearish divergences on the 5-minute chart. We were very overextended. So this is saying you can see it pretty clearly on where we have a 1, 2, and this is our wave 3. It extends up. This is our wave 4. And now what happened is that with these divergences, with this pull down here, if we take a look at the 15-minute chart, you can see the price oscillators come down. So this was, what's going to happen is once we get that pop up, whether it be just above these highs or it could go somewhere up into the 2013, who knows? We'll find out when it ends. But once this stops, what happens is we're going to get bearish divergences now on the 15-minute chart. So to me, what I'm expecting is once this one tops, you can actually trade it because let's say it gets to the 2000, somewhere in that area there. It's probably going to be anywhere from a 40 to a 60-point move to the downside, and someplace down at the 1941 makes sense. Now, how it would shape up in a bigger picture, once we get up here, say to 2000, wherever this tops, I'm just throwing out numbers. We'll know whenever it does top. But this is going to be your A. Then we're going to get that quick drop, and we could close one of these gaps or come down to this, somewhere to the 1940, and that's going to be our wave B. But if you're looking for a trade that you're going to hang on to, this is not the one you want to short. If anything, you could look long and just, use some areas as stops. But the thing is, we're probably still going to get another wave up, and that could take us somewhere up into the 2031. Heck, it even go all the way up to the 2076. And what is going to happen is when we get this pullback, we're going to start seeing the price oscillator coming down. And what's going to happen is when we get this move up from there, it's then going to cause bearish divergences on the 60-minute chart, and it's going to play out probably something very similar to what the 5-minute divergent then caused the drop, which is now, once we get this move above these highs, which I'm anticipating they're going to do, we're going to get bearish divergences on the 15-minute chart, which is going to cause a larger drop. And when that happens, we're then going to set up the bearish divergences on the 60-minute chart. And once that all completes, this should be your wave C. Now again, this is a perfect world scenario. It doesn't always work this way. I mean, heck, we can give all this back tomorrow. I'm just, as far as from a technical standpoint and patterns, this is the best fit. So until it proves wrong, I'm anticipating that this wave A is going to end sometime tomorrow. We're going to come down, make a wave B, and probably a very, very fast, or it could drag out wave C up just to get everybody all bullish again. And from there, that's when I expect probably the next phase of selling to hit. So things are going as planned, even with these massive moves. And I think that the 2 days that they've rallied things up, it would be a blessing tomorrow's if they gap it up, because I just don't think that will be sustainable. So you'll probably be able to short it. And then just remember that you have to be quick on this one, because it's probably just the wave B, and from there we're probably going to get some kind of wave C up. And if it goes as planned, that will probably be the move that you're looking to short. So with that, let's see what plays out tomorrow, and have a great night.